I'm delighted to be joined today by Ilia Drozdov, co-founder of Finery Tech, and Oliver Yates, CEO of Sheeld Market. Gentlemen, thank you both so much for joining me today.
Happy to be here. Thanks, Teana.
Great, it's great to have you. So we're going to talk a little bit about the next wave of institutional crypto trading infrastructure in Europe. And just to set the scene a little bit, we've talked about institutional grade market infrastructure for crypto assets a fair bit this year, but a lot of that activity was based in the US, especially when looking at custody and prime brokerage. So Fidelity and in particular Cointelegraph's recent surveys suggest that professional interest for the asset class in Europe is real, and arguably in the case of the spot market is stronger than in the US. And on top of that, regulators have been picking up the pace in recent weeks with the EU's MiCA regulation due to come into force at the end of next year. And the FCA is also tightening up supposed retail protection for the UK. So we're thrilled today to have two founders from EU-based startups looking to tackle this challenge that may have possibly been holding back the broader institutional adoption for crypto assets. So I'd like to invite you both just to tell us a little bit about your companies and how you came about and what you're developing. So Ilia, let's start with you.
Thank you. So my co-founder and I, we have been working for an algorithmic trading hedge fund, namely high frequency trading. That's why we know what toxic flow is and how all this in industry works, right? Exactly. And in our solution, we wanted to design our platform network in a way that we can exclude this traffic, because we know how it badly impacts the bid-ask spreads that are provided by market makers. And we also know notoriously known wash trading in crypto industry and inflated reported volumes by the exchanges, and how it can be a headache for a buy-side firm to find the real liquidity in the crypto market. Given these two facts inputs, we've designed a platform that allows peer-to-peer trading between the participants. And we have two types of players: market makers, liquidity providers on one hand, and on the other hand, buy-side from hedge funds, corporations, even banks. And peer-to-peer means that the trading is disclosed. So you know with whom you trade, and you can customize spread, you can customize liquidity. And this is also compliant. So this is our flagship product that we're currently developing.
Great, thanks. Oliver, tell us about Sheeld Market.
So essentially, we're a EU-regulated prime broker for cryptocurrency. So what I mean by that is that we provide core services for buy-side firms, more specifically custody on one side, and then everything around execution and data and reporting on the other. So the idea is that we have accounts on dozens of exchanges and with several liquidity providers, and our customers can access all of that liquidity through one interface, API if you want, through us. And we really, the same as a regular equities prime broker, we would provide low-touch services like direct market access and smarter routing across these venues, and more high-touch services as well, like a price treatment request for quotes for large block orders. And the goal here is we really want to handle the plumbing so that our customers can focus on their strategies and their business.
Fantastic. So Oliver, you mentioned that you're regulated. And Ilia, I wanted to just touch first before we get into that with you, considering that it sounds like you're taking a non-custodial approach to liquidity aggregation. So where do you guys currently sit from a regulatory perspective within the developing EU regulatory landscape, and specifically, what is MiCA going to mean for Finery and its clients?
So we're currently a non-regulated entity, and our final aim is to remain just a technology vendor. We create the technology that connects to different types of users, and probably most of them are regulated. Right now, like 90% of our users are regulated company. They have either registration or authorization from the local regulator in the UK, in the Netherlands, Switzerland, and a lot of companies from Estonia. But we as a company would like to live as a technology vendor, because we are non-custodial. We do not touch client funds. We just facilitate trading, facilitate communication, if you want. As of now, we have just a legal opinion from the local legal team, but the upcoming regulation and these markets and crypto assets regulation may change it. Especially, we might be recognized as a multilateral trading facility in these crypto assets. So we are currently preparing for this aim. But again, if we're speaking about crypto, the very idea of the crypto is that this is like people able to trade with one another without any middleman. And this is our idea. We would like to remove it. We'd like just to give them a tool so that they can reach their aims directly without any mediator in between.
Yeah, well, it'll be interesting to see how that unfolds. I know that Germany has been traditionally quite conservative when it comes to this, but there is that fine line between arranging for business and providing infrastructure facilities. Oliver, you pursued an approach that's a little more similar to traditional prime brokerage, and as you've said, you recently received regulatory authorization from France and the AMF. So under that model, that would be something that you would receive traditional arrangements into the MiCA framework. Can you tell us a little bit about what you've had to go through in France and what the interaction with the AMF was like? And do you think that the French regulation and soon the transposition into MiCA will finally tick those boxes for institutional clients?
Yeah, so for the first question, it's going to be quite fast for this one, the process. Currently, it's a 6-month process. The first part is, you get help from an external counsel because it's quite a difficult application. Generally takes about a month to get your application form done. Most of it is going to be around AML. As you can guess, we had to build a 200-page long booklet around our AML practices. And then you have operational processes, background checks on the company executives, things like that. We had to implement a bunch of internal controls, compliance controls, separations, just like you would in any brokerage or bank. So that's give or take a month, and then the rest, the 5 other months, are back and forth with the AMF. They have a bunch of questions, obviously, and you'll just amend your application along the way and add new things. So how did that interaction go? Well, the AMF was very supportive. The French government is bullish, generally speaking, around not just tokens or blockchain, but crypto, which is good for us. They're also quite educated on the topic, the different terms and the market structure. Mm-hmm. Now, they were quite tough, and also their questions generally went much further than what was legally required according to the law. So that was, I'd say, the most difficult part, is we actually had to give information that originally wasn't required, and it's luckily enough we were ready to answer them. But that, I'd say, it's quite a tough license to get. And third, final question: does it tick the boxes for institutions? I don't think it's that simple currently, because especially in France, but in Europe in general, a lot of these institutions rely on traditional banks as well for a lot of the operations, whether it's brokerage, whether it's for custody, just cash services or transfers. At some point, a bank is going to be involved, and banks, at least I can speak about the French banks, they're not currently comfortable with the level of AML that is required by the AMF for providers like us. So there is a spot where there's a bottleneck. So it's not that simple. It helps things move forward, but most institutions are going to wait for banks to validate these, the flows in the AML processes to move forward.
Yeah, you raised an interesting point about the scope of information kind of expanding. And I always wonder, is that the balance between, regulators kind of learning sometimes in real time, or if they actually are kind of pushing the boundaries around what information they're obtaining from firms. So, I think that whilst regulation could and hopefully should help to bring in new liquidity, the EU specifically seems to be moving quite quickly. I think from the outside, if you haven't been involved in consultations and the policy development space, this might seem like it's coming quite quickly. So outside of the familiar looking solutions that each of you are working on, how do you think that these developing regulatory policies could affect things like DeFi And do you think that they're helping to inhibit or encourage innovation?
I do hope that the regulator and overall legislation bodies in Europe are advanced and innovative enough in order to foster further development of the decentralized finance. The idea here is that you allow people to interact with one another directly, and it is possible right now. And the fact that some like bad guys using these for like money laundering purposes, for example, doesn't make the technology, the underlying technology or the underlying idea bad, right? Say, all these regulation around crypto custody sounds a bit odd to me, because the blockchain itself allows you, anyone, to have your asset on the blockchain, control it without anyone else. And if there is a custodian that has a control over your funds, in which way is it different from the legacy traditional financial system? So this is the question. And if the regulator comes here and tells us that if you'd like to store any kind of blockchain, crypto, or tokenized asset, you have to do it with a regulated body, it will be actually the same that we have right now. So what is the innovation here? How will it help us remove the legacy here to speed up the process? I don't know. But still, this is still the open question. And actually the guidelines that have been published by the European Commission about this MiCA regulation, they are, at least to me, they sound promising. So they are not like really strict as, for example, the BaFin approach in Germany. They just considered all the cryptocurrencies a financial instrument, or Bitcoin as a financial instrument of a new kind. This is something else. And like a personalized approach is required here. So I do hope that here in Europe we will end up with some light version of regulation that will foster innovation rather than have an additional burden on startups.
Great, Oliver, what's your take?
Yeah, so my take on this, I'd say there's 4 main points in the MiCA consultation that could be problematic for DeFi. The first one is implementation of the travel rule. Without going into detail on how it works, essentially right now for traditional assets and for banking transfers, there is a common central repository with files that gives information on the ultimate beneficiary of the transaction. And this works because everybody works under the same format. But right now, no DeFi project has been using a common or typical format to share information. Actually, most DeFi projects don't share any form of KYC information. And so if travel rule is enforced for anything related to crypto and DeFi, no protocol will be able to interact with another, because at no point will that information be able to be passed along correctly. That's one issue I see. The second one is the issue around stablecoins. They're going to require some pretty heavy rules and requirements, especially in terms of capital for people wanting to issue stablecoins in the EU. And that's going to be difficult if you want to launch a new innovative project. If it's going to die the next day just because there's no way it goes through those initial requirements, all we're going to see are government-backed initiatives, and that's nice, but there aren't going to be many, and they're going to be slow. And it's important for private projects to get through, to get innovation further along. Third thing is, if you have to do KYC on occasional customers, all of them are just going to go on other exchanges, right, or other brokerages. It's just they're not going to stay and go to European platforms. And then the fourth one is, for example, in France, we're registered, but they also had an optional plan, which they call the agreement, l'agrément. And we're the 4th company to get registered. No company has asked for or gotten the agreement. It's way too difficult to get. And if this is adopted EU-wide, the barrier to entry to get these types of licenses is going to be way too difficult for incumbents. That's just going to leave it to banks, and who knows if they're going to move in the crypto space. So, exactly. 4 points. Yeah.
Absolutely. No, I think you've summed up the key challenges there quite well. So let's take a look at each of your products. You're both at early stage, and no doubt face the perennial challenge for models that are setting up, the wheels of motion and the catch-22 of attracting liquidity makers to satisfy the liquidity takers, and vice versa. So how are each of you tackling this issue? And how does a typical conversation go when speaking with prospective clients who are looking to enter this market? Ilia, let's start with you.
Okay. So we have been happy enough to have a pilot market maker, and probably without these guys, we wouldn't start. So from the first day, we had a pilot market maker, pilot client, pilot market taker, in order to start having traction from the very beginning. And this market maker is just not so popular firm called Veliona, a Cyprus-based proprietary trading firm, but they are good enough to show quite competitive prices, at least in contrast, in comparison to centralized exchanges, such as Kraken, which is the leader in BTC Euro liquidity. Thus, when we are speaking to potential takers joining our platform, the main advantage that they will get by joining our network is that they will benefit from better prices. And there is some statistics that show that this is the result of it. And I guess this is not the fact that Kraken is like worse than the technology that we have built. This is just the way that Kraken is anonymous trading and we are disclosed trading, and we makes it possible to to include toxic flow, to customize spreads better for the clients at the end of the day. And the second point here is that we're non-custodial, so there is ability to trade with the credit limit, counterparty limit, and there is no need to send some like fiat, which is not possible during weekends or public holidays. And if there is a need to hedge your exposure, you will be able to do it on our network.
Oliver, I'm gonna elaborate on the question a little bit more for you. Looking over the past year, how have you seen that institutional interest or demand increase, if it has indeed? Is Cointelegraph accurate in their survey? And coming from that prime brokerage space, often there are elements of trust and balance sheet confidence that are typically kind of the main challenges or barriers to growth. Are you experiencing those, or is the interest exceeding that barrier?
One of my co-founders, Jacques, is the guy who built and managed Crossfinder, which is Credit Suisse's dark pool for equities, and it's one of the largest, if not the largest, cash equity dark pool in the world. And so that helps as well when we're talking, the network that he has, and also the expertise, the way we manage the platform. A lot of it is the best practice from prime brokers and some of the largest banks. Balance sheet is another issue, obviously. Some stuff you just can't do if you're not able to take on the risk. And I think the key concept here is don't try to, how could I put it in English, take too much or eat too much at one time. Just, evaluate whatever risk you can reasonably take and focus on that. You're not going to compete with an entity that has a $100 million balance sheet that they're able to deploy across the space. You're not going to be able to compete with that. But there's some other stuff on which you can compete. Crypto trading operations are quite tough. It's not just about forwarding or pre-funding accounts, but rebalancing, managing spreads, things like that. If you can make those things simpler, those don't necessarily require a balance sheet. They require experience in finance in general. And do institutions respond to this? For the moment, that most institutions aren't entering the space. As we all know, the famous institutions are coming. It hasn't been happening a lot. But from what I've seen, they don't necessarily always focus on balance sheet. Are we able to take on the risk immediately? That they have other issues around custody or, facing a regulated counterpart, things like that.
Fantastic. Gentlemen, it was great to have you with us today. Thank you so much for the fascinating chat. I wish you both very well, and we'll have you back in a few months and see how you've been getting on.
Thank you for that, Teana. Thanks, Ilia.